Welcome back. Everybody's still searching for yield in a world with low interest rates, and one of the hottest areas of this market this year, dividend-paying companies. According to the Wall Street Journal, though, the appeal of these safe haven investments is now waning, especially for utilities. Joining us right now is the Wall Street Journal's chief economics correspondent, John Hilsenrath. John, good to see you. Thanks so much for joining us. Is this fear all about the Fed, or is there something else? Because as everybody looks for yield with zero interest rates, very few places to find them other than companies that pay dividends.
Well, a lot of this is about the Fed, and frankly, these stocks got run up too high, and now they're pulling back. I think that's what we're seeing right now. It's not just utilities, it's also real estate investment trusts. As you say, investors have been looking everywhere to get higher returns because you get nothing on fixed income investments, and they push these stocks too high, basically. That we've got PE ratios in utilities now, which grow very slowly, exceeding 20 times, which is a sign that they just got overdone. What do you think about that, Peter? Dividend companies were such a safe thing to believe in because you're getting regular checks.
Yeah, what was happening is there was also the virtue of that the dividend payers like utilities and telecom stocks had no Brexit, no international weak dollar issues. All they had to do was...
This is a domestic story.
This is a purely domestic play that it really paid wonderfully, and I think it's up 20% for the year. It got way ahead of itself. I agree with the concept. And the truth is, right now, people are starting to look for what's undervalued. Energy and financials have been undervalued, so there's a little bit of a rotation going on.
But, John, this is an example of the risk and unintended consequences created by the Federal Reserve and its monetary policy, where people reach for yield. People, particularly older Americans who need income, they're desperate and they make stupid decisions, and then they will jump into something that runs up, and then they get their, cans handed to them when there's a sell-off.
I think that's exactly right. And the other area to worry about right now is in the commercial real estate market. People I talk to at the Fed are looking at that very closely. It's the same phenomenon, and it's why I think you see REITs pulling back a little bit as well. People are reaching for yield, and they're accepting very low returns on commercial real estate properties. Look outside your window. You see a lot of cranes in urban landscapes all over the country these days.
Yeah, that's a good point. All right, let's talk about the jobs numbers tomorrow, right? Big report out. We're getting the government jobs report. Broad expectations, what, 175,000 jobs created in the month of September. Do you believe that's what we'll see?
Maria, I'm not looking at the payroll number as much as I'm looking at the unemployment number. It's very interesting what's been going on this year. Excuse me. We haven't seen any declines in unemployment. The unemployment rate had been coming down steadily since the financial crisis in 2009. And it's basically flattened out at 4.9%, just below 5% this year. I want to see if that keeps coming down. If we see a move down in the unemployment rate, that gives the Fed an incentive to raise interest rates. If we don't see any movement there, then we keep talking about the Fed holding steady.
Yeah, and why is this important, Lee Carter? This is the #1 issue for voters.
It is the #1 issue for voters. And one of the things that I've been hearing people say is that you can tell who won the debate by what's happening with the markets. So if Donald Trump wins, or Hillary Clinton wins, what do you think happens with the markets on Monday?
Well,
yeah, John, what does the market do Monday if Hillary Clinton does well?
I think, I'll tell you, I think the market prefers the known over the unknown.
Right. It's just
and, regardless of what you think about Hillary Clinton or Donald Trump, Hillary Clinton is a known quantity.
Yes,
she's been in Washington for 30 years. And I think the market, at least its initial reaction until it gets used to the idea of a Trump presidency, is I think it's gonna rally on Hillary doing better in the polls than on Trump.
I think that's right, Peter, because you're making a bet. It's a risk to take Donald Trump, and yet his economic plan seems to be better for the economy than hers.
Yes, I would definitely say his plan is better, but there's also some history here. Basically, Hillary Clinton has been incredibly accommodating to Wall Street when she was a senator. Her husband was even more accommodating. So despite all the tough talk, I think there's a gap between what she says and what people think she's really going to do. You have to really listen when Hillary's talking, because she's playing to the orchestra right now. She's playing to the cheap seats. Let's see what she's really going to do.
Maybe that was the strategy of Bill Clinton.
The other thing I'd say is the Fed plays plays into this a little bit too, because you know, Donald Trump has been attacking the Fed and saying it's keeping rates too low just to support the Democrats. Hillary, you would expect, would keep Janet Yellen in the seat at the Fed. So I think when the market looks at these elections, they see a Hillary Clinton presidency as steady as she goes on monetary policy. With Donald Trump, you don't really know what you're going to get.
Yeah, and I was saying that I think maybe that might have been the strategy with Bill Clinton trashing Obamacare, because she keeps saying she wants to build on Obama's legacy and build on all of his regulations. But there's Bill Clinton, her husband, saying this is a crazy system, Obamacare stinks. Maybe he's trying to send the message that, yeah, she will change it.
Yes, Bill Clinton is Trump's surrogate. It's a whole new thing for him.
I think Clinton was also playing to his audience. He was in Michigan there, and there are a lot of unhappy, angry, especially white working class voters in places like Michigan and Ohio who aren't happy about things like Obamacare, and I think Bill Clinton was trying to reach out to them.
Don't they have good reason not to be happy? I mean, the premiums have skyrocketed. It's expensive.
Absolutely, and it's hurting people who aren't on payrolls, people who are out there have to shop on these exchanges, you know, with one or two choices on their hands, and he's playing to that crowd.
John, good to see you.
Great to be here.
Thank you. John Hilsenrath, Wall Street Journal. Be sure